Welcome back to Homebuyer University. Today we'll be diving into contingencies again. Specifically, we'll be talking about the loan contingency today. Now, we've already gone over what an appraisal contingency looks like. If you haven't watched that video, check it out. In that next contingency that we talk about, and the next contingency that typically comes up in a real estate contract is going to be that loan contingency. And oftentimes, this can kind of be the scariest one. So let's dive into loan contingencies.
Before we jump in, let's quickly redefine what contingencies are. Contingencies are safety valves that essentially protect you, your money, and your transaction while everything is falling into line.
Your loan contingency is a really important date in your contract. That date that you've agreed to with the seller means that your purchase of this property is contingent on you qualifying and getting the loan that you originally thought you were getting to purchase this property. So you effectively have X amount of days to make sure that that loan is in place and exactly what you expected it to be in order to move forward with the transaction. So if for some reason that loan isn't in line with what you were expecting, or maybe there's some wonkiness that happens with your job and you can no longer qualify, as long as it happens within that contingent time period, you have a safety clause and mechanism in case that domino doesn't fall into place.
So how do you know when it's time to remove that loan contingency and that it's safe and you don't have to worry about it anymore?
That's a great question. Essentially, what you want to have is written proof that your loan is approved from underwriting, that your income's been analyzed, the property's been analyzed, that your assets have been analyzed, and it's all approved by underwriting. Now, oftentimes you can kind of help expedite this or even help get it done sooner by having a fully underwritten pre-approval. That really paves the way to having a smooth, short loan contingency, if any at all. But while you're in escrow, it's just great to always communicate with your mortgage advisor as to the status of underwriting, if there's any conditions or anything that underwriting needs to see to give you that final approval.
These contingencies can often affect the seller's perception of your offer. For example, if you've got full contingencies in place, it may be less enticing to the seller because it looks like you might need more time to have your loan approved. On the other hand, if you have shortened or removed contingencies, that shows the seller that you're serious and a lot of the legwork has been done up front and you have a high likelihood of closing on your loan.
When trying to determine whether or not you should have a loan contingency or how long or short it should be, definitely sync up with your mortgage advisor and agent to make sure that A, you're protected, but B, you're also putting your best foot forward for that impression the seller has on your offer and how viable it looks like to them, especially if it's a multiple offer or competitive scenario.